Hello and welcome to another session of the My Solo 401k Financial Daily Webinar Series. Thank you so much for joining. I see we've already have a question that's been chatted up. Thank you so much for bringing the question. If there are others that have questions, whether on this topic or even unrelated topics, please chat them over now so that we can be sure to get to them all. As always, the presentation is being provided for educational purposes only. It should not be construed as tax, legal, or investment advice, nor is a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. Again, welcome to your daily Solo 401k webinar and Q&A session with my Solo 401k Financial, where we help you to stop overpaying taxes and start building real retirement wealth. Today's topic, how to upgrade a Schwab Solo 401k to allow for 2025 mega backdoor Roth contributions. Again, this is your chance to get answers, so please use the chat now to ask questions on today's topic or anything else. We also invite you to please like this video, as it'll help us to get the word out to other solopreneurs just like yourself, other advisors. We also invite you to subscribe, whether you're on LinkedIn or YouTube or X or Instagram, as that way you'll get notifications of when we go live, so you can come and ask questions or hear what other people are asking, or just hear the content that we share every day. So let's start out with the questions that have already been teed up, and then we'll go through the slides that we alluded to. So the first question is from Barry. Thank you so much for bringing a question, Barry. We really appreciate your participation. So if an S corporation 50% shareholder has a 401k, does the 2026 catch-up have to be Roth if over $150,000 in wages in 2025? Yes, it does. And that's regardless of whether the person's a 50% shareholder. It's just based on those wages and their age, right? They have to be of the age where they have to make catch-up contributions. So that's part of the reason that some of these discount brokerages have been forced to allow for Roth contributions. But what they don't tell you is that that's all they allow are your basic Roth contributions. In other words, they're not allowing for mega backdoor Roth contributions. They don't allow for employer Roth contributions. They don't allow for in-plan Roth conversions. So I'm thinking of, for example, Fidelity and Schwab. But what's great is that customers can open up the Solo 401k plan documents with my Solo 401k Financial, and our plan is totally portable, totally compatible. So for example, they can still have their accounts over at Fidelity or Schwab or the bank or brokerage of choice. So here's a good blog that Mark, my business partner, did. Let me post the link to that blog here. Thank you so much, Barry. We appreciate that great question. So next question is from Trent. Thanks for bringing the questions, Trent. I'm a financial advisor helping a client who is one of 4 partners in an LLC with no other employees. All 4 partners have identical ownership and titles. If only my client wants to participate in the plan now, but the other 3 do not, what does that look like from an administrative standpoint? Do they need to sign plan adoption documents and open accounts without the desire to make contributions? That's a wonderful question, Trent. We appreciate you bringing it. So it's not uncommon, right, that you'll have self-employed individuals that might have business partners. And as long as there are no non-owner, non-spouse, full-time W-2 employees working for any business owned by the person that wants to participate, or a spouse, if any, they can set up a solo 401k. Now, if only one of the partners wants to contribute, only one of the partners wants to participate, that's fine. Only that partner needs to be listed as a trustee and a participant. So the other owners are not required to be a trustee if they're not going to participate. Now, if they later wanted to participate, it would be possible, as long as those other partners are at least a 3% or more owner of the business, and the other partners are themselves reporting their own earned self-employment income, they could be added to the plan as a participant. In that case, it would also have to be added to the plan as a trustee. But if it's just one, that's fine, and the others don't need to be involved in terms of signing, etc. It's also noteworthy that we're fortunate to work with a number of advisors. And part of that is because our plan is totally compatible. We're very complementary to advisors. In other words, we don't hold the accounts. We don't force customers to go to specific financial institutions. We don't provide investment advice. Our fees are totally flat. So it's not a function of the value of the account. So we've helped lots of advisors. We're fortunate to have helped lots of advisors open up accounts wherever that advisor custodies, whether that's at Fidelity or Altruist or Schwab, just to name a few. So that's great, Trent. Thank you for that question. So if there's more questions or topics that you want to discuss, please chat it over now so that we can be sure to get to it. In the meantime, let's go through the slides that we wanted to share. So again, we want to focus on how to upgrade a Schwab Solo 401k to allow for 2025 mega backdoor Roth contributions. There's still plenty of time here to do that in 2026. So the foundation is the eligibility. So solo 401ks are not for everybody. You've got to be eligible. How are you eligible? Well, like any 401k, it's for a business. But if you're self-employed and there are no non-owner, non-spouse, full-time W-2 employees working for any business owned by you or a spouse, if any, you are eligible to set up a solo 401k, regardless of how you organize and operate your self-employed business. In other words, you don't need to have a formal legal entity. We have many, many customers who operate as sole proprietors without a formal legal entity. Or if you do have a formal legal entity, whether that's an LLC or an S Corp or a C Corp or a partnership, that's fine as long as you're reporting earned self-employment income. So for example, would be income reported on Schedule C of your 1040, or W-2 wages that you receive from the S Corp or the C Corp, or income reported on line 14 of the partnership. So that's how you demonstrate earned self-employment income. And then the other piece of the eligibility equation is that you cannot have any non-owner, non-spouse, full-time W-2 employees working for any business owned by you or a spouse, if any. And then, of course, if you want to make 2025 contributions, you would need to have reported or would need to report when you file your 2025 income tax return or business tax return, earned income, earned self-employment income for 2025 to justify those 2025 solo 401k contributions. Now, we're assuming for purposes of this discussion that the individual already has a solo 401k, but it's a basic solo 401k, like the one offered at Schwab. Or this same concept would also apply to other basic solo 401k plans that might have been set up at Fidelity or E-Trade or Ascensus, et cetera. So those basic discount brokerage solo 401k plans do not allow for mega backdoor Roth contributions because their plan documents that they create for the accounts do not allow for the two plan document requirements that are needed to enable a mega backdoor Roth contribution. Specifically, the documents do not allow for voluntary after-tax contributions, as well as in-plan Roth conversions of those voluntary after-tax funds. So when you make a mega backdoor Roth solo 401k contribution, it's really a two-step process. You're first taking advantage of the higher voluntary after-tax solo 401k contribution limits. For example, for 2025, if your plan allows it, like ours does, the individual can contribute 100% dollar for dollar of their self-employment income up to the overall limit as a voluntary after-tax contribution. That's assuming that they do not make any other contributions to the solo 401k. So the limits are very high, right? Much higher than the Roth IRA, 10 times higher than the Roth IRA limits, and multiple times higher than even the Roth 401k limits, because your Roth 401k limit is just the employee limit, which is $23,500 for 2025, or the catch-up if you're over age 50 years of age. Now, the other piece of the mega backdoor Roth equation is that you then have to move the money from the voluntary after-tax solo 401k account to a Roth account. The reason that you want to do that is so that now the growth can be tax-free, can have that tax-free growth potential, like money that's in any Roth account. So you need to have those two steps that are enabled by the underlying plan documents. So of course, Schwab's basic plan documents that they provide when you open up a basic plan at Schwab do not allow for that. But what's great is that Schwab will open up accounts for people that bring their own plan documents. And even if you already opened up that basic solo 401k plan at Schwab, those plan documents can be upgraded to our plan documents that are going to allow for the mega backdoor Roth contributions, that are also going to allow for the other features that causes many clients to open up accounts with us, whether that's the ability to invest in alternative investments, or the ability to take a solo 401k participant loan, or the ability to claim $1,500 in solo 401k tax credits. So we were the first provider to not only offer a plan that allows for the mega backdoor Roth solo 401k contributions, we were also the first provider to offer a plan, a solo 401k plan that qualifies for the tax credits. Now, the process to upgrade that basic solo 401k plan at Schwab, or really from anywhere, is referred to as a restatement. So it's not as if the individual is closing down their existing basic solo 401k plan and opening up a new solo 401k plan. Instead, the plan will continue, but now it'll be governed by the new solo 401k plan documents that are provided by my solo 401k financial that support all those advanced features. So the plan continues. You can think of it as a cut and paste. That's how I think of it, cutting out those basic documents, replacing them with our documents. Now, the process will require opening up new accounts, because those existing accounts at Schwab, from Schwab's perspective, are governed by their basic plan documents. So you'll have to open up new accounts, and we are very hands-on in helping customers and advisors open up new accounts at the bank or brokerage of choice. Those new accounts can be at Schwab. So Schwab will also open up accounts for people that bring their own plan documents. So we would help open up those new brokerage accounts at Schwab. Those are free brokerage accounts. Schwab doesn't charge anything to set it up. There's no maintenance fee. Those new brokerage accounts, which Schwab refers to as CRA accounts, are governed by the third-party plan documents, meaning our plan documents. Then we'll help transfer the cash and assets over. So in other words, we'll pre-fill the paperwork that Schwab requires to be submitted to initiate the transfer of cash and assets from the pre-existing account over to the new account. So the pre-existing pre-tax account over to a new pre-tax account, the pre-existing Roth account over to a new Roth account, etc. So that's the restatement process. The key is getting those documents that are going to allow you to do what you want to do. Like we talked about, you need new accounts at Schwab, transfer over the cash and assets. It's noteworthy that the transfer is really just going from an account for one plan to a new account for the same but restated plan. So that means that the transfer is not taxable. The transfer is not reportable. Now, if you have that basic solo 401k plan at Schwab, here in 2026, you could still upgrade the solo 401k plan documents to the plan offered by my solo 401k financial and make mega backdoor Roth solo 401k contributions for 2025. For plans that were established on or before December 31st, 2025, the individual would have preserved the ability to make all types of contributions, including employee, employer, and/or voluntary after-tax contributions for 2025 by their business tax return deadline, including any timely filed extension. So if they have the income to justify the contribution, they can make that voluntary after-tax contribution, because now the individual would have a plan, meaning the plan offered by my solo 401k financial, that allows for those voluntary after-tax contributions. And those limits, again, are very high. 100% dollar for dollar of their self-employment compensation can be contributed up to the overall limit, $70,000 for 2025 as a voluntary after-tax contribution. And if they are age 50 or older, they can make additional contributions as catch-up contributions. Now, it's noteworthy that those catch-up contributions, $7,500 if you're age 50 or older in 2025, or if you're age 60 to 63 in 2025, you can make a super catch-up contribution, which means instead of $7,500, you could contribute an additional $11,250. But it's noteworthy that those catch-up contributions would not be made as an after-tax contribution. Instead, those catch-up contributions would have to be made as either a pre-tax or a Roth. But it doesn't reduce your ability to make after-tax contributions. So you still could end up contributing even, up to those higher limits, $77,500 if you're age 50 plus, or $81,250 if you're age 60 to 63. So we talked a bit about the process, how it's a two-step process. So as part of that restatement process, as part of that upgrading process, again, we help customers open up accounts at the bank or brokerage of choice. Those accounts can be at Schwab. Schwab will open up free brokerage accounts for people that bring their own plan documents. So if the individual wants to make mega backdoor Roth contributions, let's assume they already have pre-tax contributions in their existing basic solo 401k plan from Schwab. They'll need 3 accounts, right? Because they'll need a pre-tax account to move over the cash and assets from the pre-existing pre-tax account at Schwab. Then they'll need an after-tax account to deposit the voluntary after-tax contributions so they can make that mega backdoor Roth contribution. And then they'll need a Roth account to move the after-tax funds over to the Roth. Now, the exception would be if they want to transfer those voluntary after-tax solo 401k funds to a Roth IRA, which our plan allows. So instead of transferring the after-tax funds to the Roth Solo 401k, the plan documents also allow those after-tax Solo 401k funds to be transferred out of the plan to a Roth IRA. So some customers, for example, they may have a Roth IRA where they're very satisfied with the performance and they just want to continue to accumulate dollars in that Roth IRA. So we've got a simple example. Let's assume the individual is age 45 years old, they're an S corporation owner, and they receive $100,000 from their W-2 wages from their self-employed business taxed as an S corporation. Let's assume that they have already contributed $23,500 as an employee Roth contribution. So under our plan with the mega backdoor Roth strategy, if they had not made any other contributions to the solo 401k, so they didn't make any employer contributions to the solo 401k, they could contribute an additional $46,500 as a voluntary after-tax contribution. And then they could transfer the voluntary after-tax solo 401k funds over to their Roth solo 401k. So now they would have had $70,000 accumulate in their Roth account for 2025, where they have all that potential for tax-free growth. And the deadline to make that after-tax contribution would simply be their S corporation deadline for 2025. So March 16th of 2025, since the 15th falls on a Sunday, or September 15th of 2025, if they file a timely extension for their 1120S. And then in addition to being able to now make mega backdoor Roth Solo 401k contributions for 2025, they're also going to be able to take advantage of additional benefits. So for example, upgrading their basic solo 401k plan at Schwab to our plan will qualify the solopreneur to start being able to claim $1,500 in solo 401k tax credits. That's $500 per year for 3 consecutive years. So for example, starting when they file their 2026 tax return, if they upgrade the plan in 2026. So that's going to more than cover our fees for the first 7 years, because we charge $650 as an initial cost. That includes the $525 establishment fee plus the first $125 annual fee. Then starting 12 months later, we charge our $125 annual fee that covers the second year. So even if you added up all of our fees over the first 7 years, it wouldn't even amount to $1,500. In addition, upgrading our plan will now give the solopreneur access to a solo 401k participant loan. So that's where they could borrow up to 50% of the balance, not to exceed $50,000. That's going to be literally a withdrawal of cash from their solo 401k, but it's not going to be subject to taxes. It's not going to be subject to penalties as long as it's within those loan terms. So limited again to 50% of the balance, not to exceed $50,000, documented on solo 401k loan documents. We prepare the loan documents as part of the service for no additional charge and paid back according to those loan terms. So the loan would have to be paid back in monthly or quarterly payments, equal payments of principal and interest. The interest rate is prime plus 1% or a CD rate plus 2%, with the payment spread over a 5-year term. In addition, they'll have access to investment freedom. So for example, they could choose to invest in real estate or private equity, metals, crypto, etc. So our plan documents allow for that. Compliance and ongoing support. So as the plan provider, we handle compliance support for the 401k plan for no additional charge. So for example, once the value of the plan exceeds $250,000, including the value of any defined benefit plan that might be sponsored by the solopreneur, there is an informational tax filing requirement that applies. The name of that informational tax filing form is Form 5500EZ. So customers, their advisors just have to let us know once the value exceeds $250,000 so we can add their plan to the queue to take them through that 5500EZ filing process, where we end up filing the 5500EZ under the electronic filing system. And again, for no additional charge. In addition to 1099R support. So we've been talking about being able to make 2025 mega backdoor Roth contributions to a Schwab Solo 401k. And so when you make that mega backdoor Roth contribution, remember it's a two-step process. So that first step, the voluntary after-tax Solo 401k contribution, that doesn't need to be reported. It doesn't need to be reported on the business return or the personal return. It does not need to be reported on the W-2. But the second step, when you move the funds from the voluntary after-tax Solo 401k account, either to a Roth Solo 401k or a Roth IRA, that does need to be reported. It needs to be reported on a Form 1099-R. So customers, their advisors would just let us know when they do those types of transfers. They can do that 24/7 on our website using our online forms that you can access at mysolo401k.net/forms to give us the information we would need to be able to prepare a 1099-R. And then again, we handle that for no additional charge. So ultimately, you do not need to leave Schwab to unlock advanced Solo 401k features like the mega backdoor Roth, the loans, the alternative investments, the tax credits. You only need the right plan documents. And so while there is time here in 2026, it's going to make sense to go ahead and take care of it now, just to give yourself plenty of time to open up the accounts, determine how much you want to contribute, deposit the contributions. So to get started, you would go to our website, mysolo401k.net, just click on open account, then click on get started under Solo 401k. We have a quick 1-minute application that gathers very straightforward information that we would need in order to prepare the plan documents, things such as your name, the name of your business, the name that you want to assign to the plan. We recommend 2 words in the word trust, could really be any 2 words, and the word trust for a total of 3 words. So once the application is submitted and payment is made, we prepare the plan documents within the same business day. So an email will go out with a link to our secure portal where those documents can be accessed, and then we guide you through the process. Okay, thank you so much for checking out today's slides and listening. Again, please like this video if you're finding it to be helpful, as that's going to help us to get the word out to others like you. So other solopreneurs, other advisors that might need this information to be able to secure their retirement. Okay, wonderful. Back to Trent. Thank you for your patience, Trent. Thank you for the additional question. If you've already fully funded the day job W-2 401k, including catch-up contributions, do you get to double up on the catch-up amounts? No, you don't. So the employee contribution limit, so that's the $23,500 plus any catch-up contributions that the individual can make because they're age 50 or older. That employee contribution limit applies at the employee level. Whereas the employer contribution limit and the voluntary after-tax contribution limit, that applies at the plan level, with the one exception if the individual is making contributions or contributions are being made on their behalf to a 403B. So under that 403B exception, all the contributions to the 403B, together with the contributions that the individual would want to make to the solo 401k, cannot exceed the overall limit. So in short, if the individual is participating in a day job 401k plan, they're not going to be able to make any more catch-up contributions, but if they have the self-employment income to justify it, they could still make an additional $70,000 voluntary after-tax contribution, since that voluntary after-tax contribution limit is not reduced by contributions made to a day job plan, and then transfer the $70,000 either to a Roth Solo 401k or a Roth IRA so they can have that potential for tax-free growth. Great question. Another good question from Trent. Thanks for bringing it. So if there's any final questions, please chat them over now. We want to also invite you to our community. We have the largest community of solopreneurs, advisors, other just interested parties around these topics. It's totally free to join. All are welcome. You can join quickly and easily at mysolo401k.net/my community. With over 32,000 members, we do have vibrant forums, We have a ton of ways to learn, a ton of ways to share the knowledge. For example, a library of videos and webinars. So please don't hesitate to join at mysolo401k.net/my community. All right, it looks like that's it for today's Solo 401k session. Thank you so much for investing your time with us. Your time is valuable and your retirement future is worth it. If you haven't yet, please like and subscribe so we can keep building this Solo 401k community. We'll be back here tomorrow with more crucial content to help you secure your retirement.